Hey guys, welcome back to my channel. Well, we are passionate about helping people with business and accounting. In today's video, I want to talk about bank reconciliations and why they are so important. So if you're interested, keep on watching. There are two components that you need to reconcile your bank account. So you need your bank statement and you need your cash register. The bank statement you will receive from your bank. So every month they're going to generate a statement for you, and that's what you're going to use to reconcile your register. The other one is going to be what's housed in your QuickBooks account or whatever accounting software you use. I know some companies that are very small use Excel. You can still reconcile your account in Excel. But for purposes of this video, we're going to stick with QuickBooks Online. Now, bank reconciliations don't have to be monthly, especially for large organizations. They can reconcile daily or weekly. And if we lived in a perfect world, our closing balances would equal each other. So our bank statement closing balance would equal our books. That hardly ever happens. And here's why. The first one is omissions. Sometimes we just forget to add things. So something will clear the bank account and it wasn't recorded on the books. A simple example is interest. The bank will issue you interest for an account. So let's say you have an interest-bearing account and every month you receive a small deposit for your interest. That's really hard for a lot of bookkeepers to anticipate or calculate. So they'll wait until they receive the statement to make that entry. Similar to interest is bank fees. We forget to enter our bank fees for, especially some business checking accounts have fees associated with them. And so sometimes the bookkeeper can forget to enter that fee in, and there is a discrepancy between the book balance and the statement balance. A very common one that I see all the time is bounce checks. So let's say you received a check from your client and you go to deposit it. So you enter it into your accounting software and you're waiting for it to come through and it never does. And typically what happens is that the check was deposited, but then it was taken out of the account because it bounced. So you'll see not only the withdrawal of the check, but you'll also see a fee associated with that. And then missing receipts. You just forget to enter something in. You get busy, it gets crazy, and things just don't make it to the books. So that's why it's so important to have your statement and reconcile against that. I mean, even for us at Financial Design, we get super busy. Our priority is our clients. And so what I was doing in the past was I was reconciling my books for Financial Design every quarter. And what happened was our merchant account wasn't processing some of our clients' fees. On our books, we were recording the receipt. However, that money never cleared our bank account. And so things like that will happen, especially if you rely on a third-party service provider to make these deposits for companies that are on auto pay. And if you're not reconciling your books, you can miss out on income. Now, another reason why you'll see books versus bank disagreeing is really just timing. So if you go to deposit a check on the 20th and there's a hold on the check, your books could show that that money has been received, but the bank isn't showing that deposit yet. And so you can see a variance in the deposits because of timing. No one did anything wrong. It's just when that deposit took place versus when you recorded it in your accounting software. Going along with timing is when you cut a check to a contractor, a supplier, a vendor, they don't clear that check right away. Some people may hold on to it for a week or two. And so if you're at that cutoff line where you're reconciling, you're showing a list of outstanding checks, and that is completely okay. And the last reason why your books could disagree with the bank statement is just simple human error. A lot of this stuff is being inputted manually. And so most of the time there's an error in your cash register. And so you just need to go in and fix those adjustments. So whether it be a duplicate expense, a duplicate receipt, you just have to go in and clear that information. Now, the reason why we do bank account reconciliations is to identify all of those reasons why things happen. So our job as business owners, as accountants, as anyone who's managing the books, is to make sure that we are stating financial information correctly. And so for a lot of businesses, they operate, all of their business out of the business checking accounts. So it's important to reconcile every single one of those accounts. So if your business has 4 bank accounts, you need to reconcile all 4 bank accounts. If they have 15 bank accounts, you need to reconcile all 15 bank accounts. And so not doing so will cause misstatements on your financial reports. That's really important at the end of the year when you're trying to file your taxes. So there are several steps that you need to take in order to reconcile. The first one is gathering all of your documents. So you want to start with your bank statement. And so once your bank statement has been generated by the bank, go in and obtain that copy. The next thing you want to do is head over to QuickBooks. So let's go ahead and do that now and start reconciling this account. Now, keep in mind, this is not one of our accounts. This is a sample company. So I'm very limited in what I can show you in this sample company. In order to start reconciling, you want to go to the accounting tab. And if you click on reconcile here at the top, you want to go ahead and get started. This is what your screen will look like. So it gives you a list of all of your accounts. So this company has a checking account and a savings account. Let's go ahead and start with the checking account. And I'm going to give it an ending balance and an ending date. So you would get this information right off your bank statement. We're going to start reconciling. Now, here are all of the transactions that have not been reconciled. So you can see that this company hasn't been reconciled since probably May, since the first transaction is June. So when things are working appropriately, you would just click here, select all, and this would be a variance of 0. And the way that it's calculating this is it's taking your ending date and QuickBooks knows to filter by the statement ending date. So it's not going to pick up anything after September 30th. Because I am at a balance, I know that there's a transaction on here that's creating a difference. So on our bank statement, we'll see that the $5,000 is our beginning balance, and then it's subtracting out all of our payments, and then it's adding all of our deposits. So when I see a variance, that triggers me to go look and see if there's anything that it's picking up outside of our statement ending date. That could be either here at the beginning or at the end of the month. Now, since this company hasn't been reconciled, I want to keep June's information. So my next step would be to pull my statement and to unclick all of this information because there is a variance. And then what I would do is tick mark each one of the accounts that have cleared the bank statement and try to identify where that variance is coming from. So if I had a statement, then I would know, okay, so this cleared, this cleared, this cleared. And so I would tick mark every single one of the transactions that have cleared the account. All right, so let's say that all of this information has cleared except for our MasterCard payment. So this MasterCard payment did not clear and I'm off by $1. So the next thing that I would do is look at my statement ending date and make sure that I typed that information in correctly. So let's say I didn't. Let's say that this should have been $2,101. Click save. And now I am completely in balance. So this credit card payment, we went ahead and made the payment, but it hadn't cleared our account yet. And so by unclicking that, then we're showing, hey, this is going to be a reconciling item for next month, and it should clear next statement. Hey guys, I'm sitting down editing this video, and one thing that I forgot to mention that it's really important to note is that if there's any transactions that are outside of your statement period, you want to make sure that you revisit those and see why they haven't cleared yet. So we call those reconciling items, and what that does is you go back through every transaction. So let's say you have an expense that hasn't cleared, but that doesn't really make sense if you paid it with your Visa card and you know it should have been cleared. You want to go back through and look at it and make sure that it's not a duplicate transaction. So that's the part that takes the longest when reconciling bank accounts, is making sure that all of the transactions that haven't cleared are in fact transactions that will clear the following month and aren't just really old transactions sitting on the books. Now, back to the video. So then we finish now, and then it says you have reconciled this account, and then you can either click on the reconciliation report, which shows that you're reconciled through the 30th. We reconciled on the 29th, which probably would never happen in real life. We are always usually a month behind. And Craig reconciled it. We started our balance with $5,000. We had $6,000 in cleared payments. We deposited $3,000, and then we're left with $2,000. We have $900 in uncleared transactions, and our register balance as of 9/30 is $1,200. Now here's everything that cleared. So QBO will list out all of your cleared payments as well as your cleared deposits, and then it shows you how many items are left uncleared, which is $900, and that's our credit card payment. You can also hide some of this information, and so you'll just see the top level information. You won't see all of the items that had not cleared yet. And then you have the option of printing this report, saving it as a PDF, looking at the history. So there's only one report here because there's only been one reconciliation. And then you can filter by which accounts you want to view. Now again, bank reconciliations, they really do identify things that you thought had happened and that didn't necessarily happen. Like in our case, where we're billing our clients, we're recording the entry, and then the payment never was received. And so those types of things happen, day to day. So you have to reconcile but all of your accounts and make sure that things are clearing correctly. I also highly recommend that you guys reconcile your credit card accounts as well. And that's really to ensure that you're recording all of the expenses. Typically, what I see with reconciliations, especially credit card reconciliations, is that people are likely to record the payment of the credit card, but will forget to go in and add every single one of those transactions that make up that payment. So on your credit card reconciliation, after you've paid the balance, so let's say you have a $1,200 credit card bill and you pay the $1,200, your balance is zero. So if your credit card register doesn't show a zero balance, then you're missing transactions. So keep that in mind. That's just a bonus tip. Reconciliations are really important in my opinion. And if you have not began reconciling your books, now is the time to do so. I hope you found this video helpful. If you did, please give it a like, subscribe to the channel if you haven't, share it with a friend, and I'll see you in the next one. Bye.